Hello, everybody. This is Noah and John, and we are from UrbanDigs, and it is Friday. So you're going to get your weekly Manhattan market update. John, let's get right to it. I'm looking at supply. It's starting to go up just a little bit. Show me that chart.
Yeah, so the supply count ticked up a tiny bit at like 69.74. That's like 0.1% from the week before. And that's really because we actually finally had, and we'll see this in the weekly numbers, really finally had a solid week of supply of new inventory.
Yeah, we know something you don't, and we're going to get to that really soon. And we think that supply might be turning the corner here, but it's just too soon to tell. So we will see. Let's move on to demand. Every time I go here, it's the same story. John, 4338 looks like it's going up. Show me that chart.
Yeah, this is something that not only we know, but apparently everybody knows, which is supply, which is that pending sales and contract signs and demand is just keeps going up. So again, we had another increase in pending sales, 4.2% for the week ago. Last week at 4,000 something. I mean, it's just going up.
It's gangbusters, and I think there's a herd-like mentality going on, and this kind of thing just goes on until it doesn't anymore. We'll just keep reporting on it. We're just kind of in record territory with these monthly contracts signed. I don't know how we're going to sustain it, but when you add it all together, this market pulse just keeps going up. And we talked about this. One day we're going to wake up and it's going to show a seller's market sign. I don't know. It's kind of crazy. Let's go to the weeklies, and we can look at that. A little peek around the corner and see which way things are coming. And John, this is what you're talking about. Look at supply right here at 558, because the last 4 days we're seeing a big influx coming online. Just to put it into perspective, let's see that chart.
Yeah, there you go. I mean, it's 558. That's 55% from where it was last week at 360. Maybe spring break is over. People are back. Maybe they see the market going bonkers, and now's the time they can raise their hand and finally put their property on the market. But either way, this is the supply number that we were expecting to see a few weeks ago, and it's finally started to show up here. So
yes,
just as you noted, we might be edging our way into seller market territory, but a number like this is going to kind of keep us in equilibrium for a little bit longer, which is, on balance, that's a good thing.
Yeah, and this is what we kept saying to people, is that we were expecting a weekly pace of over 500 if we're going to really start to see the listing season kick into high gear. And this is the first time that we're seeing this. And I like to click on the 1 month as well, just to kind of get a broader perspective and make sure that my interpretations are in line. And sure enough, look at this. You're starting to see a 2 handle on that monthly pace of supply. The fact that so many deals are going into contract and so many listings are going off market is muting the fact that we actually are having inventory come on this market.
Exactly.
Very interesting stuff, John. Let's move on to the level of demand. I'm looking at contract signed. It came in at 338. Hard to sustain that 350 level. Make no mistake about it. This is still a very strong number, but it is down. Johnny, show me that chart.
Yeah, it's down. It's down 1.7%. I suppose you could make a story out of that, but the fact remains, I mean, this is the fifth week over 300. I mean, this is just gangbuster territory. We said it already before. We're going to say it again, gangbuster territory.
Yeah, it's unbelievable. Well, let's move on from the sales market. Enough about the sales market. We've been talking about that for a long time. Let's go take a check-in on the rental market. We have not done that in a little while. We're going to take a look at the 3 main aspects. Let's look at inventory. We're going to look at demand, and then we're going to look at last asking rental rates to see where prices are trending. And John, this is a great chart that you have over here. It's really showing you rental inventory that is coming online over the last 15 months or so. And it really does show you what's happening right here. And when I look at a chart like this, it just looks like the rental market is still trying to find its way in terms of inventory. On the inventory level, there's just stuff coming on.
Yeah, it looked like the inventory battle was sort of, almost sort of coming to an end. But you look at these March bars and they seem very high. But, bear in mind, this is a year-over-year comparison. So the pandemic really started affecting inventory early March, late March. So this is not really truly apples to apples, but the fact remains that we're still running high in terms of rental inventory.
Right, exactly. That's the point. There's still inventory coming on. So now let's move that up into demand. Let's move that over to demand. And now you see a different picture, right? Because the inventory was high for a while. And this chart's great because the rental market is picking up. That is the point. Activity is way, way up. And this chart does show it. I mean, you can see this progressive sustained increase. And when you have the rental market showing leases signed at this consecutive pace, you do start to feel it in the field. And that's going to probably translate first into concessions, John. That's usually how this goes. The first thing that goes away are concessions. So, they may have offered 3-4 months, back in the dark days. Maybe that's down to 1 month or 2 months. If you could find yourself getting more than that now, I think you're kind of doing okay.
Yeah, no, I certainly think it comes down to sort of the location and bed count. But, we've reported on this back in last time we did this in January, that it was the larger apartments here that are leading the way. And I'm not sure if that's folks needing, room for work, schools, Zoom rooms, et cetera. But, you look at that 3-bed chart and it's just, I would not have expected those apartments to lead the way, to be honest. I thought it might be in the 1s and the 2s, but certainly the 3 bedrooms are where the action is right now on the rental side.
Yeah, it's just a sign of the times. It's a change of the buyers' behaviors and the renters' behaviors. They want bigger property, work from home. It's really interesting. Okay, and now finally we're going to go into those rental prices. You have to understand it's very, very hard to track the rental rates because we do not have final lease amounts. We do not have the concessions that were offered, but we do see those last asking rates, and we can kind of trend those out. And when you do see this chart, you can see that we have been down during this COVID crisis, and we're waiting for this to come back. It looks like it's rebounding a little bit, but we're still down. And that's the point. We know the rental market is finding its way, but those rental rates are not rising by any notable means at all.
No, and I think you hit the nail on the head in the last segment when you talked about concessions. Its concessions are going to be the first thing to fall out, and it's going to be those rental prices are going to be the last thing to finally move here. So you're seeing a little bit of rebound as we talked on the larger apartment side. Like 3 beds have come back a lot more than say the studios have, but there's a lot of room to go here.
Yeah. Excellent. That is great, Johnny. Thank you for pulling up all those rental stats. That is your Manhattan rental market update. That is John Walkup. I am Noah Rosenblatt. We're both of UrbanDigs. If you got questions, we got answers. Please check out our forum right over here. Other than that, have a great weekend, and we'll catch you next time.